Every successful trader they understand areas of supply and demand. And in this video, I'm going to show you how to trade supply and demand like a pro. I'm going to show you a particular concept that you can attach to this to make you understand supply and demand even better. If that sounds good for you, let's dive into this video. Now, before I go into the supply and demand proper, there's a particular concept I would like you to understand, and that is called the market phase. Now, the market phase is simply a phase of accumulation, a phase of distribution, a markup, and a markdown. Accumulation phase here is simply a phase where the lows are manipulated and the market is broken to the upside. So when you see this phase, it's simply the accumulation phase. An accumulation phase is simply a phase where demand are being built up. In this case, the market is preparing to push higher, and that is a lot of demand coming in. So that means in the future, when price comes to this level, we can see some reaction from this level. We will see reaction in this level here. So that is demand there. On the opposite end there is what we call distribution. Distribution is simply the manipulations of the highs and the break of structure to the downside. What it simply means is that smart money has accumulated enough position to push the price lower, thereby creating supply at this region. So it makes sense when price come here in the future, we are going to have a reaction in that level, and that is all you need, a reaction to take your trade, regardless the time frame, because market is fractal. Now, within this market phase, we have areas of reaccumulation and redistribution. For example, we have an accumulation here, price move up, reaccumulates again, and then move to the upside. Now, accumulations is a form of what? A reversal. In this case, is a form of reversal, while reaccumulation is a continuation play. So in this case, reaccumulation, we are manipulating the lows and we are also breaking structure to the upside. So what it means is that when price comes back to this level, then this becomes area of what? Demand, and you can take your entry or reaction from here. Redistribution, same thing, just like reaccumulation. We have distribution here, area of reversal, price push down, redistribute again, and then push lower. In this case, the definition stays the same, manipulation of the high, and then a break of structure to the downside. So this is area of what? Supply, because supply came in to push price to the downside. So when price comes to this area in the future, that area can serve as a point of interest for you to take your trade to the downside. Now, a supply is simply an area on the chart where others came in to push price to the downside. We have supply here. Now, for an area to be a valid supply, the push to the downside must be strong, meaning a strong momentum that pushes price, creating imbalances in the market. That is area of supply. And what it means is that when price comes to that area, we are going to sell. Area of demand simply means where others came in to push price to the upside. And that push to the upside should be a strong momentum. And by so doing, when price comes back to this area here, you call that area of what? Reaction, point of interest to push price to the upside. Now, the areas where orders were accumulated are called base. Market accumulate, consolidate here, that is the base. Base simply means consolidation, or it means areas of what? Accumulation or distribution. And in this case here, the base here is your demand base here, where market consolidates, and then those are areas where you can easily take a reaction of the market. So we have different types of supply and demand, which we are going to go in right now. So we can divide the types of demand into reversal and continuation. Meaning, if you are trying to trade the reversal, these are the kind of demand and the supply you'll be looking at. If you are trying to trade continuation, these are what you'll be looking at. The first one here simply means rally, base, drop. Rally, we have a base, we have a drop. Now this base here is your area of what distribution, manipulation of the eye, and a break of structure to the downside here. So when price comes back to the base, as a supply and demand trader, you trade on the base. When price comes to the base, that's where you take your entry. You can use any entry to take your entry here. And I've shared so many entries on this channel, so just check my channel. You're going to see a lot of entry videos. This is for a bearish reversal. Market was bullish. All of a sudden there was consolidation. This consolidation means market was building supply to push price to the downside. So when that happens, you mark out the base, and that base is where you'll be taking your trade from, and this is called the point of interest. So the other one, DBR, here simply means drop, base, rally. Drop, we have a base here, and we have a rally. This simply means the point of accumulation. Remember, market phase, point of accumulation, manipulation of the lows and push to the upside, and this is the base, your point of interest. When market comes back down here, that's where you take your entry, and then you push price to the upside. You can go to a lower time frame to look for other entry criteria. You can combine supply and demand with some smart money concepts to even have a better risk to reward. Example of a continuation play here is a rally, base, rally, reaccumulation. Remember I told you reaccumulation, market move up, accumulate here, and then push higher. This base here is a consolidation, and that is your point of interest, meaning when price comes back here, you should look for entry. Then the last one here, drop, base, drop, base, drop, drop, base, drop. This is a mistake I put R there, it should be D. So this is your base, area of what supply, where when price gets back to that area, you can take your entry to push to the downside. Let's go to the chart and see where you can use supply and demand. Now starting on this monthly, yeah, if you can see this area here, price came down. This is accumulation zone. You can see manipulation of the lows, push to the upside. So when price came back to that area, what do you expect? A push to the upside, and you could have looked for entry in here. Let's go to the weekly. In this case here, we have a drop, base, drop, 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 base, drop. So we have a base here in here. So when price come back in here, you can see price is even reacting. This is a current price action. Price is currently reacting off here because this is a base. So you can easily sell from here. Or if you go to a lower time frame, like in the daily, you see it even clearer. Drop, base, drop. Here we have drop, base, drop. So market came back here, you can see a push to the downside here. Now this is drop, base, rally. Drop, base, rally, you can take a trade there. Even though the market is strong bearish, you can still look for a scalp opportunity in here to push price, because price will react from the area of demand and supply. Looking further here, we have a drop, base, rally. Drop, base, rally, sign of what? Reversal. So you can see here price came back to area of what? Demand, and you can see there we push to the upside, drop base rally, creating area of what? Demand again. Yeah, price came back down, push to the upside. Yeah, rally base rally, but in this case we did not get tapped in here. Price hasn't gotten here, but in the future you expect a reaction in case price gets in here. And you can see market respects the area of what? Supply and demand. Even if it's going to give way, we can see that reaction first, but it might not go far, and before you know, market will invalidate that area. So looking at the 1 hour, this is an area of drop base drop here. Market reacted here, but eventually gave way because we're bearish in this instance here. A drop base drop, supply introduced here. You can see market move to the downside. Drop base drop. So all of these are base. Okay, so you can pick the last one in here where you can take your trade, and you can see market is already reacting from this level. Now all you need to do is to backtest. Now the last supply and demand I would like to show you is the hidden base. Most supply and demand, you are going to see different candles forming. For example, you have in this case here a drop base. You can see multiple candles here. Now what happens when we don't have candles within the base? And that is where the hidden base comes in. Now hidden base, to understand hidden base, you need to know just two things. Now in this case you have to drop here. Now we have a drop. The base are the wicks here because others came in here. Drop base drop. So when price, you mark out your hidden base, that is the 2 wicks. So when price comes back there, you can take your what? Entry. This is for a supply, and we also have for demand. So let's look at an example for hidden base. So in this case here, you can see these two candles, a drop. This is a base. So you mark out the wicks. Price came in there, you can see, and then tanked. The same thing here. A drop, base, the wick, drop. So you can see price came in here and then moved to the downside. Same thing here, drop, base, drop. But in this case it didn't work out. But if it touches here, you can take a trade here, but eventually when price came back here, it went to the upside. So drop, base, drop. The wicks are very powerful. You can see drop, base, drop. Market came up, went back low before actually breaking that base. So your supply and demand can also be in form of single candles, wicks. Okay, if you go to the daily, this is fractal, but I prefer using the hidden base on the higher time frame, so I can go to the lower time frame and then refine my position. Do we have any form of this here? Okay, one is here, you can see. Yeah, rally, base, rally. Price came back in here. This is just point of interest. Most people do not consider this as supply and demand, but it is supply and demand. Your base, your wicks in a single candle, like for example this candle that you're seeing here, when price opened here, orders were built within these wicks. Remember, this accumulation market, there was a lot of accumulation. People were buying because probably they realized that price would need to go higher, so they were accumulating their position to push price to the upside. So the wick alone, just a single candle wick, is your area of what? Supply and demand. So in the future, when price comes in here, you can take your trade. I hope this makes sense. If you have any questions, make sure you put it in the description tab. And if this makes sense, make sure you like this video, subscribe, share this video so that we reach more traders, so that we can build a profitable trading community. I will see you in this video.